Hello and welcome everyone to the week ahead commodity report for the 3rd to the 7th of June, presented by myself, Phil Carr, at the Gold and Silver Club. And of course we will be reviewing gold, silver and crude oil prices for the week ahead. So firstly, what do you need to know as we go into next week? Well, essentially last week we saw an explosive move to the upside with the precious metals, gold climbing to a 7-week high on Friday, its first monthly gain in 4 months, as investors sought that safe haven investment after US President Donald Trump threatened tariffs on imports from Mexico, which fed fears of a global economic slowdown. Meanwhile, oil prices, they slumped over 3% on Friday, posting their biggest monthly drop in 6 months after US President Donald Trump had stoked that global trade tensions by threatening tariffs on Mexico, which is a key US trade partner and a major supplier of crude oil. Brent crude oil futures, in fact, posted a 13.8% slide in the month of May, and WTI crude oil was down over 16% in May, the biggest monthly fall since November. Meanwhile, hedge funds and money managers, they cut their net long positions in US crude futures and options positions in the latest week and increased their net long positions in COMEX gold, which of course has helped gold to explode back above that $1,300 per ounce barrier. So with that, let's just move over to the charts and we'll talk you through our forecasts and the key levels that we're looking at as we go into next week. So firstly, moving over to gold, certainly I hope some of you capitalized on this range bound trade again in the latest week. In fact, we hit our profit target here on Friday for 150 points on gold, essentially trading that range again, which we've mentioned time and time again, that you want to just capitalize on this 200-point range that we're seeing week to week on gold. In fact, we came right back into our sweet spot for a buy here just on Thursday, bought back in at $1,276 per ounce, and then hit our profit target here on Friday on the breakout, which was helped further by comments from Donald Trump, of course, which was an escalation in the trade war tensions, where he is essentially proposing tariffs now on Mexico. And we of course saw gold immediately get the safe haven bid overnight. Now, as you can imagine, I've actually been getting a lot of questions over the course of this week from those out there that were shorting the market and were on the wrong side of this gold move. So let me just address that at the moment. For those that may have been on the wrong side, we've certainly not been on the wrong side of this move. We've been capitalizing on the breakout to the upside, as you mentioned as well, on gold asset of the day. Don't get too bearish here on gold. It's very much a range bound market at the moment. You just want to capitalize on trading that range. Look for evidence to come in of buyers back towards the lower end of this range and then trade it back up to resistance. So of course the question is now is, what is gold going to do next as we go into the following week? Well, gold has closed at $1,305 per ounce as we now head into the month of June. We have certainly some close overhead resistance here, which resides around $1,310. We've had a very strong close here. If you look at the weekly chart as well, we've pushed up to 7-week highs here. So as we go into next week, we might well see some additional follow through. Bear in mind that hedge funds and money managers, they have increased their overall net long positions in the latest week. But we do have quite a lot of resistance here just overhead at that 1310 zone. What we might see going into next week, if we do break above Friday's high, is a push higher up towards that 1310 zone. If we were able to break and clear above that, still I would look within a 200-point range approximately going into next week. I would be looking out around that 1310 zone to see whether sellers will come in, because it's been such a key significant level of resistance previously. So if we do spike up to that level, then we start to see pressure to the downside. It might in fact offer an opportunity to just trade this back down towards the lower end of the range again. Normally the month of June from a seasonal perspective tends to be a bit of a flat month for gold, but it can catch a bid in the early part of the week, so look out for that. So we might see some upside momentum certainly from Monday through to Wednesday potentially, but then on Thursday we have the European Central Bank announcement, Mario Draghi's press conference, and on Friday we have non-farm payroll. So certainly expect some further volatility later on in the week as well, certainly for gold and also the US dollar as well. So what I'm looking out for gold here, as I mentioned, we've hit our profit target on Friday, so now I'm looking at new entries as we go into next week. So I'm looking out at this zone around 1300 to 1310 to see if we do clear above this resistance, or we very simply have a failed attempt at that zone and then just move within this range where we've tended to see gold move within a 200-point range. Very clear support and resistance at the moment if you look at the price action. On the flip side of that, if gold is able to break close above 1310, we could then get a breakout back towards the next major layer of resistance, which would be 1,318 US dollars per ounce. That's if it really gets follow through beyond that zone and we see a breakout above that 1310 level. So that's what I would look out for on the upside if we did follow through. But otherwise, I would just be mindful that we might start to run into resistance between that 1310 to 1305 zone. And if we do, that's where we could start to see a retracement. Then essentially, if we do see profit taking around that resistance level, particularly around the European Central Bank announcement or Friday's non-farm payroll. So there's likely to be, again, opportunities to trade that range as we head into next week. The most important points being that hedge funds and money managers, they've increased their overall net long positions on gold. Usually over the month of June tends to be a flat month for gold, but certainly the beginning of the month can see some further upside. And also just bear in mind that we do have quite a lot of resistance at the moment around that 1310 to 1318 zone. That's where we could see sellers come back into this market. And also just finally, if we cannot build up further momentum back above Friday's highs here and we stall at this level, that could also see the price action just start to come back if gold just doesn't follow through at all here from Friday's breakout. So those are really the main scenarios that I'm looking at as we go into next week on gold. Now, moving over to silver. Silver hedge funds and money managers, they've reduced their net long positions again in the latest week here with silver. And of course, what you've seen here last week is a breakout back towards that midpoint of the Keltner channel. We've started to run into some resistance here, and it looks like very simply another bear flag setting up as we go into June. Again, normally June doesn't tend to be such a strong month for silver. Gold tends to be a better performer over the month of June, and that's very clear on the gold silver ratio, which continues to break out. It broke out to 89 to 1 just last week, which is favoring upside on gold versus silver. So what we might see as we head into next week is if silver cannot pick up any additional momentum to the upside, and certainly if it was to break back below Friday's lows, we might just see another bear flag formation and a rollover back towards the lower end of this trend channel and back towards the swing lows again here, which reside at approximately 1425. So that's if really silver does not pick up any additional momentum as we go into next week. On the flip side of that, if silver was able to get some degree of support, make another retest back towards resistance here and break out back above that midpoint of the Keltner, that's where we could start to get a move back towards the 1473 zone overhead. But I think it's more likely going into next week, especially given that hedge funds and money managers, they've reduced their net longs again on silver, that we could roll over and start to break down again. And particularly between now and the end of the month of June, I'd look out for potential weakness again to come into silver. Even with the breakout on gold, where gold has broken out to 7-week highs, silver hasn't really followed through. So as soon as we start to see profit taking on gold and that starts to push lower, that could immediately have an impact on silver to the downside as well. That correlation will be there, but it's likely that silver would sell off more significantly than gold. Now, moving over to crude oil, as we mentioned on last week's report and also our midweek report of oil asset of the day, hedge funds and money managers, they had reduced their net long positions on crude oil yet again in the latest week. And be very careful about trying to pick the bottom here for crude oil. We've definitely seen more pressure to the downside as a result of a trade war escalation now between the US and Mexico, with Donald Trump now proposing tariffs on Mexico. And that, of course, has had a very significant negative impact on oil prices, with over a 16% decline to the downside now over the month of May for crude oil. As we go into next week, it's interesting because normally from a seasonal point of view, in fact, the month of June does tend to be a bullish month for crude oil. But that said, because we've had such a dramatic decline here, we might well see a bit more downside before oil starts to come in to some degree of support. Also, as I mentioned last week too, one point which will definitely keep you on the right side of oil the majority of the time is being very aware of that midpoint of the Keltner, or essentially the 20-day moving average. Whilst the price is below that 20 MA, from a swing trading point of view or from a longer term positional point of view, you don't want to be buying oil once it gets below that level. If you look at here where we broke above that zone at the beginning of January, in fact I'll take you even further back than that. If you look at mid-October here, once we started to break below that midpoint, that trend channel, this is where essentially the 20-day moving average zone this is where the price action really started to accelerate to the downside, and it was not a buy for a swing trade or a longer term positional trade until we got into the beginning of 2019. That's where we then had confirmation to start getting long on oil. In fact, we continued to buy on every single retracement back towards that midpoint of the channel throughout 2019 until more recently we broke and closed below that zone last week, and we've continued to really see that acceleration now to the downside. So be really careful about trying to pick the low unless you're really getting in for very much shorter term trades. Even there, you need to be careful at the moment. The momentum is very bearish, as we mentioned last week as well. During our midweek report, what we want to look out for is the potential for oil to roll over, break support, as we've seen the vulnerability for oil to get sold into rallies at the moment. And that's really the importance of fundamentals and research when you are trading the oil market. We've seen several negative data points for oil over the last week, which included Wednesday's crude oil inventory data, which have again seen a significant increase in overall oil inventories. In fact, the previous week was the largest build of crude oil inventories since 2017. We've also seen, of course, that negative sentiment in the oil market as a result of the trade tariffs which Donald Trump is now proposing on Mexico. And we're also, from a seasonal point of view, it's very typical for oil to sell off at the end of May here. So now, as we go into next week, we do have the next major layers here of support residing around that $50 per barrel level for WTI crude oil. What I would look out for, certainly if we were to break back below Friday's lows, we might get a little bit more follow through to the downside. Really, the major zones are approximately between 50 to 52 US dollars per barrel. That's where you start to come into all of this consolidation going back to January of 2019, where several times we continue to find support at that layer here. So if we were to break down slightly lower as we go into the beginning of next week, those are the zones where I would look out for potentially evidence of buyers to come back in to oil here. Certainly if we do start to see that, we could then see a retracement as we head into the month of June, which normally tends to be a supportive month for oil prices. But obviously, again, you want to really keep updated with respect to data. The latest news feeds, real-time data with the oil market will help you a lot when you are trading crude oil. So as we go into next week, watch out for that support layer, which will be sitting around 50 to 53 US dollars per barrel. Again, just have a look at the charts here, just going back to the price action that we saw back in January and February. So we might get a retracement here as we go into next week. We are quite overdone here to the sell side, but again, don't try and pick the low until you've got meaningful confirmation of that on some of the lower time frames. If you are looking for retracements here on oil as we go into next week, it could then lend into some sort of V-shaped reversal if we were to see that pick up momentum to the upside going into next week. If we do see some support come into oil, we might see some sort of V-shaped reversal retracement to the upside. We are quite overdone at the moment, but at the same time, you want to look out for potential rallies again to get sold into if we were to come back up to those previous levels of support which were broken down from. So that's where I would look out for potentially. If we do rally to the upside, you don't want to start catching this trade too late and then start to get yourself into a position where you're buying just as sellers are coming back in to this market. So watch out for that as we go into next week with oil. Also, on the flip side of that, if oil just does not catch a bid at all, certainly don't get on the long side of this. Be a bit careful now of shorting oil because we are now down 16% over the month of May here, so it can quite fast catch a bid to the upside. You're better off, if you're looking to sell into oil, to sell into rallies rather than try to sell it right at the lows at the moment. You want to be really careful of that, those fast capitulation moves that you can see to the upside. The major data points that you want to look out for WTI crude oil as we go into next week will be the API data on Tuesday, Wednesday's crude oil inventories, and then later on the week the Baker Hughes oil rig count as well. Just bear in mind on Thursday we've got European Central Bank announcement and Friday's non-farm payrolls, so it should really be a lucrative week again next week for the markets. I hope some of you certainly capitalize on that breakout move that we had on gold. Nice 150 points profit that we had, banking our profits there on Friday, and I do hope you stayed on the right side of this move with oil as you've seen a dramatic breakdown in price over the last few days with that escalation in trade war tensions. As I mentioned last week, do keep an eye out for that. Now, it's really important when you trade that you do have an edge in the market. Certainly you want to have access to real-time data, real-time news feeds. You want to be aware of seasonality cycles and what the big players are doing in this market. So if you would like access to all of that information, very simply, there's an opportunity for you to join us at the Gold and Silver Club. As a member of the Gold and Silver Club, you get access to research-driven trading. So you have access to our exclusive live trading room webinars. You get real-time trade alerts, real-time trading research and market insights. You have access to our private members academy membership site, as well as support and one-to-one mentoring. To make an application to join us at the Gold and Silver Club, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. Also, do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.